broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. Happy Thursday, and welcome to the Trading Studio with Andy and Jamie. And my name is Steve Gomez. I'm filling in for Scott, Marketing Director. And I just want to welcome you all to today's Trading Studio. And before we get started, I'll say hello to Andy and Jamie. Hey, guys.
Hey, Steve. Thanks for stepping up.
Yeah. So let's do the job that Scott does, which is typically running a poll. And let's go ahead and manage the polls here real quick. I'm going to pop a poll out there, you guys. It's pretty binary. You're either a Trade Ideas subscriber or not. I'm going to launch that. And then once I get a super majority, we'll go ahead and release the findings. So we got about 50% voted so far. Oh, good. You guys are doing great. All right. That was a quick quorum. Thank you so much. So let's see. How do I close the poll, and share the poll? All right. So we got a big turnout of current users, 88% current active subscribers and 12% kicking the tires, and hopefully we can convert some of those here pretty soon. The second poll coming through here is going to be a follow-up question to the first one, and that is, for those of you that are TI subscribers, this is only geared to you. Do you have premium access with the AI and the odds maker, or are you using regular Trade Ideas standard version Pro? And again, I'll leave this open for a quorum until we reach it. Make sure we get a good sample, then I'll turn you over to Andy and Jamie, and we will talk about this interesting market that is probably very unfamiliar to a lot of people. A couple more votes there, and I'll manage the close. We'll close the poll. I think we're close enough. That's a 2/3 majority, so we'll close and share. And again, as usual, the preference seems to be towards the premium version. I'm using all of our tools, the backtester and the AI, Holly, as we affectionately call her. So 87% using that and 13% using standard, which is cool because some people just want to use the standard, and a lot of people decide to start with standard and maybe even upgrade once they feel comfortable. So thank you so much for those polls. I'm going to hide those polls now, and you should be seeing Andy's screen again. So the webinar is being recorded, including the polls that just went through. So if you miss any of the presentation or have to leave early, just check on our YouTube channel later this evening. It'll be compressed and uploaded for people that want to watch on their own time. All right, so without further ado, I'll bring in Andy and Jamie. Hello, guys.
Hello again.
And Andy has to unmute his soft mic.
Thank you for reminding me to do that, Steve.
There we go.
All right. Yeah, thank you, Steve, for stepping up again for Scott. And hey, Jamie, what's up?
Oh, just watching the show, man. Trying to keep my powder dry.
Yeah, it's been some show, and we'll definitely dive into that in a minute. I know a lot of you guys, majority of you in here, I'm going to bet, has never really set through a really vicious bear market. I'm not calling this a bear market, but obviously the price action is not what we're accustomed to over the last several years. So we'll get all into that. As a matter of fact, I made a quick turn on today's webinar just based upon the action, and once again I'll get into that in just a minute. But before we do, let's take care of the legal issues here. No, I shouldn't call it issues, but a disclaimer. Guys, you're going to see a lot of stuff today, and you might hear some talking about stocks and buy points and trigger points and things like that, but none of it is to be construed as investment advice. Okay, this is for educational purposes only. If you are seeking advice, find somebody who's licensed, like a broker or an RIA, somebody that hangs that tag in their office. But let's move on and talk about all the support and education and training that you get here at Trade Ideas. And I know a lot of you guys are news here and joined us over the last couple of weeks, and you're experiencing this firsthand. And that is our support and education here. We have an array of venues throughout the trading day. It starts right there early in the morning in the traders room, moderated by Barry. Guys, if you haven't been in there, you got to get in there. There's about 600 plus traders, some very good ones. You get to see the software, and this is not just for subscribers. This is for everybody. So great place to hang out. And then we also have 4 webinars in the 5 Eastern time slot every day. Get Jamie and Steve on Monday. You get me and Steve, actually with Steve hosting on Tuesday. Then you get Dan Merkin and Brad on Wednesday. And then here we are today in the trading studio with myself and my sidekick, Jamie Hodge. And then we don't stop there, guys. We have a Friday support session. Right now, this thing is like 3 hours long. It starts at 11 a.m. For some reason, this doesn't get out there enough. I mean, this is people who come to this are just blown away by the help they get. If you're new and you're having to wait for your one-on-one training, geez, come in here. We can answer a lot of your questions, probably all of them, actually all of them. And it's a great hangout, and we're seeing more and more each week. So please get in that Friday support session, and even if you're not a subscriber, you can come there and learn more about the product. We do have one-on-one training. We are starting to kind of warn people, because what's happening, we're getting so big that we cannot pull myself, Jamie, and Steve away from all our responsibilities to fulfill the demand for one-on-one training, and that's just the growing pains. So we are going to be making some changes down the road. It's not been set in stone yet, but there will be some changes where we're going to go to more of a group training session. It just has to be done because the product is in such demand that we can't. It's just tough for us to continue the one-on-one training sessions. But as of right now, if you do subscribe, you do get a free one-on-one training session. So be sure to sign up for that. Brokerage Plus. Hopefully this is going to be coming out of beta maybe in the next 2 or 3 months. It's been in beta for a while, which and I've noticed more and more people. Jamie put some stats up the other day. A lot of trades being fired off. Now these are traders that are seasoned. I don't want to say veterans, but experienced traders.
Advanced. It's a double. It's black diamond, right?
It is. Yeah, it is.
Yeah.
It is. You really got to know what you're doing in there, but it can come in handy if you know how to write some really good strategies and you want to automate them. For more information about that, just visit trade-ideas.com/beta. All right, and like I said earlier, guys, I mean, just over the last 30 or 45 minutes, watching the market close, talking to Jamie and Steve, I'm like, I don't think I'd be fair on a day like today just for us to go over kind of our usual presentation, showing some alerts and things like that. We will do that, of course, but there's a lot happening in the marketplace right now, and like I said, a lot of you guys have never experienced that, and fortunately for you, I've experienced it a lot. Jamie has experienced it a lot, and Steve has. We between us all, we have probably 60 plus years of trading experience. So we've sit through some couple of bear markets where you got price action like this. And so even though I'm going to follow this agenda a little bit, I'm going to leave it open because I know you guys are probably going to have a lot of questions about, man, these setups, these things I've been doing over the last couple years or year, they're not working anymore. What's going on here? It's just so we want to answer those questions for you, and obviously we're going to have words of wisdom that we've learned over the years to help us in when you get a tape like this. There's an old saying that goes, bear markets wipe out both bulls and bears. And you've heard me mention that, and it's true. I mean, even if you're a good short seller, it can be very difficult. So if I don't stick with the agenda today and we get off the beaten path, don't be alarmed. Okay, it's going to be for your benefit if we do. Okay, so let's move on and let's talk about the market. All right. This is when the market recaps get fun. I mean, actually, they get more entertaining. So let me back out of this and let's go pull up the old spiders and take a look at today's action. Oh, that's some ugly candles.
Have we counted the days, I guess, Andy? So just looking at we could calculate all 5 of those candles or 3, but how many individual days? Like, I think the other day was around 50-ish.
Oh, that we wiped out?
Yeah.
Yeah. We probably have to recount again now, because it definitely goes back for 3 months. So yeah, it like we say, elevator down in a lot of cases, and this is definitely an elevator down.
Oh yeah, that's the turbo elevator.
And we mentioned the other day, we said be aware of these averages rolling over. Well, now you got all of them rolling over. Even the 50 is starting to almost turn pretty quickly here. Steve's webinar 2 days ago after this green day, I said, guys, I'm not patting myself on the back by any means, but I just wanted you to know that even though we had a nice rebound there, I think a lot of that was just kind of
dead caddy.
Well, it's just customary to what we've been seeing in the market. You see a pullback, you buy it, man. You've been seeing that for 9 years now. So, but I said, be aware, because there was some major selling, going on in these 2 days. If those sellers come back, and they came back yesterday after the opening, probably after the first couple hours, and they started selling, closed on lows yesterday, and then today there is just one ugly candle. Surprisingly, the volume, was 2.7 relative volume. That's still pretty stout, but nothing compared to what we saw on this day. So.
And Andy, if I can just make a comment here that just kind of lines up, because we always talk about when we start to see things that usually aren't there. That animal's usually not in the forest. And you know what? It all started early in the week on Monday when Steve and I did my webinar. There were these real opposite readings on the compare count windows between the big caps and the small caps, which was very odd, right? You never see that. On top of that, Steve, who has done how many Trade of the Weeks, now dozens and dozens and dozens of consistent Trade of the Weeks, and he decides nothing's out there, cash.
Yep.
Right. And then your observations, and this is unfolding in real time. What we always tell everybody is actually kind of happening now. These things that we don't see. And just look at all the animals that have shown up in the forest this week that are usually never there, and they started showing up Monday. And as the week progressed, this is the result.
Exactly, Jamie. Very good observation. And we went. Oh gosh, I don't know how long it was. Over a year and some change, maybe a year and a half. I don't know. Without a 5% correction in the market, and my theory, when you see, and I tell people this all the time, is just like those people who are waiting for that 5%. When it comes, it's usually a lot worse than 5%, because we got so overextended. We're still back. Still kind of hanging out, not too far from November highs, kind of. So it's as much destruction as you see done there, and over the last week. I mean, there can be a lot more to come, and I'll go more into that here in a minute, but I mean, boy, look how close we are now to our 200-day moving average. If I were a betting man, I would say we're going to have a date with that here in the next, maybe tomorrow. It's fallen off fast, and I would say now, I haven't calculated this, but I would say we're probably close to a 10% correction already.
Gotta be.
That's huge. That's and basically in a couple of weeks, less than that.
And the mind starts working. Well, but we've had such an extended up period. Is the correction going to be 2x what a normal correction is, or 3x, or is it done? We don't know.
Yeah. I mean, honestly, if you ask me, I don't know, but seeing this kind of action, I would be more surprised if we hit a new high than I would if we had a 20% correction in the marketplace. I don't think yeah, it does. It wouldn't surprise me at all if we see a 20% correction.
Yeah, and the volume levels, these volume levels were, I mean, significant. I mean, it's just, in a lot of these times when we go through these cycles, they're like, it's on low volume. Well, these days have been on extremely heavy volume, and I believe that number's right, Andy. 10% high so far.
Okay, yeah. I mean, you can see there has been at least probably 5 trend lines broken. If you started like right here, drew a trend line, started right here, drew like a 3-month trend line. And now you're talking about a trend line going back all the way to the first of last year. Let me see if I can set this up for you without all these lines. And look at there. So this is a long-term trend line right there that I just probably put it out of whack. No, it still stayed there. So guys, we are breaking several trend lines, and where this might go, like I said, I'd be real surprised if we didn't have a date with this 200-day moving average, and who knows, maybe we find ourselves down here. But boy, this is all just happening fast. It was less than 2 weeks ago. We're at all-time highs. But so I am going, if you hear some pauses, Stan mentions 20% is a bear market. You're right, Stan, but it has to remain there for maybe, I think it's normally like 2 months. So in other words, you can have a 20% correction without having a bear market. Now, if you have a 20% drop and it remains below that 20% below that high for a couple of months, then it's considered a bear market. And you can have a bear market without a recession. You don't need a recession to start a bear market. But and I'm going to have some points to make about that too. But who does the 10 or 20%? Marguerite, I'm not sure exactly what you mean by who does the 10 or 20% correction. It's just a percentage the market comes off its highs when we talk about a 10% correction. So if you took the value, real easy to calculate, you just basically take the high of 286, subtract the low of 257, and then you divide that number by the high, and it's going to give you the percentage. Okay, real quick, to enter SMA inside the chart, you just go right click there, and you find where it says indicators, and you go to SMA, Sonia, and then what you want to do is you want to put the periods right here. You take this out, and if say you want a 20 period, you put 20 right there, and then you go and you put it right here, and you put 20 right there, and that's going to just hit you can choose your color as well if you want to. All right, and then you just hit OK, and you're going to launch that new moving average there. Wally, do you think it's healthy to see this drop rather than seeing securities? Yes, Wally, very good question. This is very, very healthy. It's unhealthy to see for us to get overextended like we were, for an extreme, period of time. And this is usually the circumstances when you finally do get these huge aggressive sell-offs in the marketplace, and when you do get extremely overbought on pretty much all parameters. But yeah, I think it's healthy. It's kind of like controlled burning in the forest. You want the forest to be healthy and strong and green. You got to go in there and thin it out by doing some controlled burning. That's kind of what you're seeing here in the market.
It's like if we take it down to the microverse. Show me a stock that just goes up all the time. Right? There's not one.
Yeah, but as a trader too, if you're an active trader, you love this kind of action because it kind of resets it. It resets a lot of trades, a lot of stocks you've been looking for, maybe to pick up on a pullback. Maybe to do some swing trading on. It can make some nice setups for you, as the market comes down. But you just have to be careful. And we'll talk a lot about, pulling back your size, like I'm saying, it's a different animal. You get accustomed to doing something for 8-9 years in the marketplace, and then all of a sudden, whoa, those things aren't working anymore. And not only that, you're losing a lot more money because you're trading the same size, and the moves are vicious. So you always want to, slow things down. I like to try to zero in my focus in bear markets. Maybe not look at many windows. Maybe I'm just going to focus on something like this. First of all, on a lot of my bullish swing trading alerts that I use, I'm not seeing a whole lot of things come through here. Look at my Alpha Predator Pro. All this is bearish VIX, bearish ETFs coming through, setting up on here. So for the most part, all day these were blank. So that makes me focus on my extreme volume. And if I was watching this and only this in the morning, I noticed the market opened up, never went up all day. I see iRobot coming through. Remember how I do my patience thing? Maybe I stay patient for the first 30 minutes, and I see iRobot coming through. Let's take a look at the 5-minute chart right there, and basically sold off. Came through what, 65 and traded. That's almost $5 in that move right there.
Yeah, and I like that move because it's not all crazy. It's pretty.
No.
It's a pretty controlled burn, so to speak, in this market.
Exactly. And but I will say this when it comes to shorting. Okay, I typically will go do half my size as I would a long. This is going back to my day trading days, because what happens is when you do get your up moves, they can be really exaggerated, because not only do you have new interests maybe trying to pick a bottom or bid into a stock, then you have shorts that are also covering. So that's why I really cut back my size, maybe even play a quarter of my size, and then I'd like to sit in them longer, let them work for me. So see if I see another example in here. Like I said, I didn't want to spend a whole lot of time on telling you, what you should have and could have done today. I want to focus on this market, this price action, and things that I could, teach you. That was a pretty good move this morning. That kept, you can see the break right here, over here on the daily. That's what you look for. Remember, if you turn this upside down, how we're always looking for stocks like that to buy to the upside. Well, here you have a gap and go to the downside, breaking through support, and it gave you another, $1.50 right there, whatever it was. So try to limit. If you're looking all over the place, especially if you're accustomed to going long, you're gonna find reasons to try to play bounces, because I've been there, and trust me. So on these vicious down tapes, maybe you want to zoom in your focus on maybe looking for something that can put out some. And Jamie had some real good stuff too on his range breaks to the downside. You know how he takes his strong stocks, so he flips them over, and he finds some beautiful, range breaks to the downside. I don't know if you have any examples of that today, Jamie, but I know they were probably out there.
I can always filter through a couple of these here in a little bit. But David had a question. He was asking, normally do we see a slowdown in volume just before, say, a reset, or I'm assuming he means when the bottom gets put in, whenever that might be. And I mean, tell me if you agree with me. I mean, on an event like this, where it's basically the entire market, basically the S&P 500 components driving this thing, there's going to be huge volume capitulation at the bottom on the way back up too, I would assume, because it's not like a regular stock that's range bound and the seller dries up and then it goes to sleep for a little bit and then you try to play the bounce. I don't know. It's hard to fathom the volume slowing down.
Right. It is. And really, when you have this type of action, it has a tendency to overshoot. So if you're looking at levels, maybe the 200-day moving average, a lot of times, it will break it and shoot through and then put in a wick and bounce. You do have a tendency, like I said, to overshoot. Maybe you're watching this level down here. Once again, of course, you got to remember, if we come down to this level, now we're through all of our major averages, and they are all rolling over, which means major damage, technical damage has been done to the markets, and then you've got to start worrying about, the potential you know, well, like I mentioned earlier, 20%, you know, correction. But that's a very good question, David. And used to be the extremes. We used to have what's called capitulation buying and then capitulation selling. I think since the advent of high frequency trading, we don't see that anymore. I've noticed that over the last 10 years. Of course, we haven't seen too many extremes.
So Andy, so are you talking about like when we used to get in front of the market shorts, right?
Mm-hmm.
And then at the very end, you know that he was about to do what we call the cleanup print.
Mm-hmm.
So you could just send market orders and be included in that print. But
exactly.
yeah, you know, those were nice, but
yeah,
like all the other cool things, they well, that was basically an inefficiency, and they zipped them all up.
Yep. Well, Jamie and Steve can vouch for this too. In the past, what you would have is reversal days where, take example, this green candle which closed on highs. So you used to not see reversals like this where it closes on highs, it opens up the next day, trades an inside bar. What we used to have is like capitulation buy-in that reaches the top, and then you have a reversal midday, and all the sellers come in, and the stock closes on low, on huge volume. Same thing with the downside. If you go back to 2009, when we had that, that was the high-frequency traders were coming into the market, but they weren't prevalent like they are today. But typically, or historically, your reversal days on the bottom, same thing, capitulation selling, everybody throwing their hands up, I give up, selling all their stocks, and then you have the huge turnaround midday or late in the day, and it finishes on highs for the day. You don't see that as much in the more, I notice with the high frequency trading. I don't know what it is, but well, I have an idea of it. I'm not going to go down that rabbit hole, but anyway, let me show you some things what you can do, okay? And then I'm going to give you some nice. I made a little Word doc on some things that you will hear if you're listening to talking heads or to brokers or money managers, but I'm going to tell you show you how you should respond when you hear those things or what you should think. So what I did today, I took the SMA tracker real quick, and I said, well, I'm going to take it. And first, let me just pull up the SMA tracker and show you what it looked like. And keep firing away, guys. I will stop to answer any questions that you have. So this is my SMA tracker that I've showed you guys before that I developed for a money manager. Oh, wait, I need a load, not share. All right. And these are a lot of stocks, I believe, from his actually portfolio. And wow, look at this. Just a week ago, you had like all green in here. Now look at it. Just amazing how fast everything turned from pretty much all green to all red. Let's sort by the moving average here. And he's got only 3 stocks in his portfolio that's above the 50-period moving average. And remember, the 50-period moving average is usually a good indicator where it's kind of a bullish chart. So my idea was not to show you this, but I just what I wanted to do is, so I'm looking at this today, and I said, well, how can I arrange this so maybe the guys and gals can look for opportunity in the marketplace? So what I did was I created the SMA tracker opportunity, for the lack of a better word at the time when I was putting it together. And now what I've done is, this is pretty much let's take a look at the configuration. So if you're out there and you're looking for potential setups, that may be happening as the market's falling out of bed, this is a top list, and we're going to look at the filters real quick. I look for a change. In other words, I want it above the 200-day moving average, and I only want to see things above their 50-day moving average. Market cap has to be $3 billion or higher. The price has to be $5. I'm looking for liquid stocks in here. And so what I've done is just added some moving averages to this top list. So I don't want to see the stuff that's rolling over below its 200-day, below its 50-day. So now I can pull this up, sort it by the 50-day, which I have it sorted right here by the 50-day. And now, since I have that filter, I know everything has to be above, so I can just go down to the bottom, if it'll let me. And I screwed up. There we go. And now I can find stocks that are sitting on their 50-day moving average. So this is something that I would keep like active, you know, during the trading day, if the market is coming in and you're thinking, you know, maybe I want to dabble. And once again, pull back your size, okay, because you're kind of catching a falling knife. But if you're looking for maybe, you know, a stock that you've been eyeballing for a while, maybe you see it in here, maybe you've been looking at Adobe, you can see it's pulling back close to its 50-day moving average, and you can pull it up and take a look at the chart and see right there that it's touching its moving average.
And of course, Andy, we're getting some requests that you drop the SMA tracker into the old chat window there.
I certainly will. Yeah, just an easy way, something as simple as this, where you can look for opportunity. Let's say you think you want to find things close to the 200-day. Okay, you can sort by the 200-day. Come down here at the bottom. Let's find things that are close to their 200-day moving average. And this one's actually moving up. Interesting looking chart there. That's what you call relative strength. Look at these last few days as the market is getting killed. This one is trying to go higher. One I would definitely keep my eye on because now it's above all its moving averages. Interesting looking chart there. There's one that's pulling back. So you can see here there's still quite a few of them that are above the 200-day moving average, which may want to keep something like this open to market. If we do have some more selling, maybe you can catch, you know, something like a Gilead coming way down here. So yeah, I will do that. There's not a whole lot to it. And what you might want to do, and I'll go ahead and do it now, is maybe put since it's earnings season, you want to make sure that you're not catching something maybe right before earnings. Let's go to our earnings date, and we're going to add a column.
And what timing with earnings, right?
Oh yeah, exactly.
I mean, with what's going on in the market, you know.
Exactly.
It happened. Interesting.
All right, let's do it. Yeah.
To the fire.
And there's earnings date, and we're not going to add a filter. We're going to show a column. So now we can look over here real quickly and see when the earnings date is. Remember, if it has a negative number, it's already passed. If it has a positive number other than the 2.5, it's coming up. All right, so I'll make that a little bit bigger for you there and squeeze this in, and I'll go ahead and save and copy, share this with you. And yeah, something like this can be handy. But once again, guys, you want to maintain patience. Okay, the market. I mean, don't feel like you have to catch the bottom. And like we said, this could go on for another 10% to the downside. So so even if I am looking to potentially play a stock, you know, on a bounce like this, I'm still going in with a quarter size, a half size, because I know I'm kind of jumping in front of the bus here. So, all right, I'm gonna drop it into the chat window, guys, and I'll just call it SMA Tracker Opportunity, and drop the link in there, and there you go, guys. You're welcome. You're welcome, Jeffrey. Let's see if I've
good stuff.
All right, yeah, so we're caught up. I was just reading some of the questions there. So this is the kind of thing. This is a kind of a scanner that you can use when you're basically being patient and waiting on prices to come to you. You know, pull you up something where the stock pretty much has to still be in somewhat of a bullish chart if it's above its 50-day and it's above its 200-day. So that is that, and once again, guys, like I said, I had some other material, but I really put it on the sideline, on the back burner, maybe for a future date, because I really wanted to talk about, how the market, the tape, and how difficult it is. So what I want to talk to you about now, I just put together a little Word doc. Let me pull it up, because if you listen to the news or you listen to your broker or money manager, remember most of them or all of them are trying to push an agenda. They're trying to, smart money will try to get you to, buy, even though they're maybe dumping their stocks. I'm not going to mention any names, but some very prominent brokers have done this to their own clients. You'll hear, CNBC doing it, Fox News, Fox Business. You hear the talking heads on there, and they'll come on and they'll tell you things like, hey, things are still great, nothing's changed. So I put together a little Word doc that may help you, and it's kind of mousy, but anyway, I want to share it with you.
Andy, it's funny that you say that, because I don't really watch network. I don't watch network television. Now in the morning, I will, because they stream it, KUSI here in San Diego. Okay. I will I like them. I'll listen to a little bit of it. But today, when they went to the market commentary, they're all like, "Oh yeah, the market's doing that again," and "Oh yeah, they tell us there's nothing to worry about." And I mean, I'm serious. That's exactly what they said.
It is.
There's nothing to worry about.
Right.
Like, what is this, a Saturday Night Live skit?
Exactly. And you will hear that all the time. And Jamie, that's you hit the nail on the head. And Brian Shannon always says price pays, and that's true. And that's what you have to think about, And so what I did, I put together some ideas that need to be in your head, more defensive ideas when you hear these kind of things, almost like what your response would be to something like this, because you're going to hear these things and they're going to make it sound like it makes sense to the to the layman, and for a lot of people it does. And and if your time horizon, if you're looking at 30 years down the road, then fine, that's okay, I understand that. But then again, I know it's tough to time the market and all that, but at the same time, Jamie, Steve, and I, we have been around long enough to know, what can happen when you get markets this overextended. And we just want to be, to prepare you and let you be aware, of what to, things to look for and maybe what to avoid. So here's a classic one. The economy is doing great. Well, yeah, the economy may be doing great, but the economy and the stock market are not the same. People get those confused a lot of time. And a great example of that is the market has gone up for went up for 8 straight years with a GDP below 3%. So we were like really struggling there, on the gross domestic product, but yet the stock market, because of financial engineering, was moving up like it didn't even care, like the economy was fine and spinning on all wheels. Another one you're going to hear is you can buy good companies at a discount. Well, yeah, I understand that, but when you see this kind of action, just tell yourself, what, I think I might be able to pick them up at a much bigger discount. I'm not going to be in a hurry here. I'm going to be patient. I'm going to get my price. Another one, this is the pullback everybody wanted. You hear them all the time saying, well, all those people, they wanted their 5% pullback. Well, now you have a 10% pullback. So now's your time. Don't be, it's time to jump in and get it. All right. Once again, guys, this is one of the longest. It may be close to being the longest, but I know it's the second longest, a 9-year-old bull market without a 20% correction. Okay, so you got to tell yourself, we've blown through the 5%. Now we're at 10%. This might be a lot steeper this time. Okay, so once again, I'm going to be patient. I'm not going to rush in, and buy this. If you're just day trading and things like that, that's fine, but you got to be careful there too, because the price action will not be the same as you're accustomed to. Those buyers you saw stepping in and propping up your stock when you're, trying to buy the, bounces, all of a sudden they're not there anymore, and it just keeps going lower, and you just pounding your head. Why? Well, you may just be early. Maybe you need to wait till, the action gets a little more favorable. Here's a good one. Companies are killing earnings. The earnings are great. They're beating earnings left and right. Well, that's true, but once again, first of all, earning reports are backward looking. Okay, you're looking at what they did, in the prior quarter. A lot of times they beat numbers on lowered guidance. And I don't want to get too much into fundamentals, guys. I just want to, I'm trying to enforce in you that, to favor technical analysis versus fundamental analysis, because you're not going to have the same information that the insiders have. Okay, if the insiders are dumping money right now for a reason that they can see 6 to 9 months down the road, so be careful, what they're telling you about, fundamental analysis. Markets are fairly priced based on future earnings projections. Okay, once again, nobody has a crystal ball. There are many things that can throw off these projections. Macro events, inflation. If we get, interest rates are creeping up right now. That could really accelerate. That nothing worse in a market than hyperinflation. So I'm not saying it's going to happen, and the talking heads are telling you it's not going to happen. But these things come out of nowhere, guys. I'm telling you.
Andy?
So, yeah.
I can't hold back anymore. I have to jump in.
Oh,
and say
good.
Something.
I hope it's about the Kramer thing, huh, Steve?
Please do.
Well, I could get back to that, but I see where you're going with all this, and I'm listening and nodding my head. And one of the things you've heard me say in the past is, you can bring on CFOs and CEOs on CNBC all day long. CEOs, CFOs, they embellish, they spin, they fib, but what is always true are the footprints in the sand, which is what the chart is telling us.
Exactly right.
I'm trolling Kramer here at the moment on Twitter because Jim had a meltdown on Mad Money. He explains who is the group of complete morons who are hurting the stock market and the Dow.
Oh gosh.
Jim Kramer actually said that.
Batman hurting the market.
Yeah, and so I wrote back. I see, Jim. The market's wrong, and you're right. All those morons, they're called sellers. All right. That's all I wanted to say.
Good for you. Good for you. Yeah, Steve is right, and that's why my last sentence is there. Is once again, price is the only thing that pays, because I trust price action much over an analyst, and if you listen to those guys enough, they'll start brainwashing you, into thinking, oh man, this is a good company. Why do they keep selling it? Why it keeps, it doesn't matter, guys. Just try to keep the emotions out of it. Pull back your size. I'll show you, Justin, in just a minute how to get the latest version there. But anyway, I just wanted to share some thoughts for you guys. I know because I remember the first time, Steve and I and Jamie was probably there a little bit before we were, but we came in around 98, and so we caught the tail end of the .com bubble. So we were there. And man, I just remember, in 2001, it just, whoa, what is going on here? And it was,
Amazon was at $5, was it not?
Yeah. Oh, exactly. And let me give you another story, guys. We had this group of guys. We were kind of affiliated with this group out of Houston, and they're traders. Obviously, everybody would love to come to San Diego and trade with us. So they'd come up here, and these are guys that were big hitters, trading, $15 and $20 million accounts. Many of them blew up their whole account because they were so accustomed for basically 10 years trading this market where all you had to do on pullbacks were just buy, hand over fist, buy more. And to see, quote unquote, good traders, blowing up $20 million accounts, it just blew your mind. So we know how difficult it is, and honestly, if you're new to trading, this can kind of be a blessing. I told a guy on a one-on-one session the other day, I said, because he was just now getting into it, I said, you know what, this is probably is going to be a blessing because you're getting in on the tough side. You're not conditioned to just buy pullbacks. You are going to learn the art of trading, and there's a lot of truth to that because. It's not always, rainbows and whatever daisies, whatever they in the stock market. Yeah,
rainbows and unicorns.
Unicorns, thank you. Yeah, something like that. All right, guys. Well, listen, we have some time left. opening up for questions. I mean, I'm sure, you know, some of you have some questions. Let me just make sure I didn't leave off anything I was going to talk about today. Yeah, I pretty much hit it all because I wanted to focus on this this price action. And Jamie, please, if you have any more words of wisdom out there that you would like to share, we do have a few minutes. Or, you know, if somebody is looking, maybe you're eyeballing a chart out there, a stock, and you want us to take a look at it, and once again, we will take a look at it in the backdrop of our current market, but which is very important.
Pull up Eli Lilly, LLY.
Wow.
It was a real nice little setup today, see, for getting in on that on the smaller time frame. It's set up real nicely.
Yeah, right there, and
at the top, you know, at the opening, that little range that it put in right there, right after the open up top there.
Oh, up here.
Yeah, yeah.
Yep, absolutely. Yep, that's definitely a range break right there.
And you know what? Just about everything had volume in it today. I mean, there weren't a whole lot of stocks out there that have big caps that were showing relative volume of 1, you know. And you know, once again, from a very simplistic standpoint, Andy, we knew we were cooking with hot oil the past, not, you know, even getting into last week, because the volume levels on a relative basis were so high on these you know, these indice ETFs, the SPY, you know, and the DIA and the Qs, which is something, you know, they're usually flopping around slightly less or greater than 1, you know.
Yep. Yeah, very observant, Jamie. I think, and just looking at, like I said, this alpha predator I'm seeing all these, you know, these inverted bearish ETFs coming through on huge volume, you know. So strong relative volume. So these are either people taking a huge bearish bet or potentially some hedging going on in there as well. But yeah, there's a lot of red flags.
We have to throw up at least a little nasty chart. What was it? The XIV, the crap out, right?
Oh yeah.
Let's go ahead and just pull that up for everyone to take a gander at. And you know, ladies and gentlemen, we've seen plenty of stocks do this, right, Andy? Over time. Do you ever remember seeing an ETF implode like this?
No.
In this grand scale? I mean, close that prior day at 90.
Yeah.
Nope.
That is really ugly.
This is a great example of, well, I think this is just one of the first cracks to surface in the whole ETF underworld, shall we say, because a lot of those instruments, they say they can do one thing, but guess what? You better read the fine print, because they might have a little golden parachute and they can just bail like they did on this one. That's why, you know, it always goes back where you and I and a lot of other people have discussed, most people have no idea. If you're investing for the long term, you should not be holding ETFs because of time decay, right?
Exactly.
And, you know, people that, you know, these things are made for hedging, and that's just what they'll do.
That's right. That's right. And you know what? I could, you know, you could see it coming because, man, there's so many people short volatility, and what was short volatility and probably still is short volatility. You just thinking it's going to just do the same thing and roll back over. So
you think that guy from Target that made all the money shorting VXX is asking for his old job back yet?
Yeah, right.
Oh,
I know.
man.
I know.
I got to give credit where credit's due. I think Brian Shannon was the first one to say that. So
exactly. All right, Gregory, let me take a look at that vert real quick that you asked about. And well, that's obviously had a great day today. Earnings this morning. Yeah, there's not a lot negative I have to say about that chart. Obviously.
Some things are immune.
Yep. Typical gap and go. You know, there's no, you know, real resistance. Actually got all the way through it today. Yeah. No, that's pretty. I mean, if you're asking me, I don't know if you have a position. You know, this it's not something I'd probably chase in this environment. But it, you know, these are the type of charts that sometimes can keep going for several days. You know, tomorrow you may have a small, inside day.
How big is the short float on that thing? What, 30, almost 33%? It looks like on your single stock window.
Oh yeah, 32% short float. So obviously they had good earnings and a nice squeeze on all day.
Green squeeze.
Yep, from the get-go. So yeah, a nice looking chart there. You know, once again, maybe this is one that you keep an eye on. If the market does happen to continue down, maybe this pulls back for you can kind of set up over the next few days or something for another move. But I don't know if you're in it or you're looking at buying it. But yeah, impressive day nonetheless. Well, probably what's happening though. He said, we've got a question here. When I back test my strategy, I cannot see calendar from this week trades. Is it normal? Well, the only way that would be happening is if your exit strategy is more than 1 day. So in other words, if you're back testing a strategy with a 3-day or a 4-day hold, it's not going to calculate that trade. Obviously, you can't calculate the data without it exiting. So you're going to have to wait for each trade to exit. So that's the only way that would happen. All right, guys. Well, I think this was a very kind of informative webinar to do for you guys, and don't worry, we'll all have more tomorrow. We got our support session. Don't forget to come in there tomorrow if you want. We'll be talking a lot more about you know, the market action, maybe how to trade this bearish tape, and maybe look for opportunity. And not only that, we didn't even talk about Holly today because there wasn't a whole lot of Holly to talk about. Very few trades, down 34 cents. Once again, canary in the coal mine. She took a few shots at long this morning and one short, and pretty much just kind of only one hit her pretty good there, but nonetheless.
And I got to say, I'm happy with that in this market environment. You know.
All right. Well, let me run through this. Hang on, guys. We will offer you a discount code. So let me just move right through, go back on my presentation here. Oh, guys, yeah, if you did not know, and we did this very close to the market, and so in a very timely fashion, myself, Jamie, Steve, and Sean, all big-time traders, and which when we have time to do it anymore, but you know, between them all of us, once again, probably over 80 years in the marketplace of trading, actively trading stocks. We wrote a book. It's an ebook, and it's called 5 Ways to Win in the Post-BTFD Market. So if you're accustomed to buying the dip and that is not working anymore, we are giving you some ideas on how to trade, you know, pretty much a bearish tape, bearish market, if you will. It's a free download. Just go to trade-ideas.com/ebook, and you can download this for free. And there's going to be some great strategies in there. Okay, and also, guys, in our handouts panel, if you do not have it, okay, there's a Cloud Links PDF in there. Be sure to grab that because it has all of our best alerts in there. And it also has this ebook, no, I'm sorry, all the alerts from the ebook. So you'll be able to find them in that handout. Once again, if you go to your GoToWebinar interface, you will find it in there. But do check that out. Podcast every Friday. I don't know if you have any special guests lined up for tomorrow, Jamie, but we will be putting on another podcast. Some very good information, guys. If please, you know, find the time to listen to that. I'm sure we'll probably be talking a lot about this kind of action, you know, going forward. So if you want to learn more about maybe how to trade a tape like this, join our podcast. And you can download that on your favorite app. So Guys, we are having a price increase coming on February 15th, okay? If you look up here, you'll be able to see our old rates. These are going to be the new rates. The good news for you is if you get in before this deadline, okay, you will be grandfathered in at these rates, so there's no excuses for those of you guys who are entertaining it not to jump in before February 15th, all right? So it's about a 20% increase across the board. We are adding more and more bells and whistles, which means we're bringing on more texts and more help for you guys. So this kind of justifies our increase. We do have a promo code today. It's I Heart Holly. Okay, so this is for a standard version or the premium version. So if you go to tradeIdeas.com/price, okay, you will find a place to drop this promo code in. That's I Heart Holly to get you 15% off your first month or the first year, depending on if you sign up for a monthly or an annual package. But it does work for both the premium and the standard. All right, more information, guys. You can find us at info@trade-ideas.com. That's your best place to send any questions that you might have. You can see find Jamie at QuantBot on Twitter, and Steve Gomez at Today Trader. And be sure to join our Facebook page. We throw little nuggets in there every now and then. So the phone number down at the bottom, guys, that is usually it is for accounting issues only. Okay, we don't have the manpower to answer. We have so many, questions about configurations and things like that. We reserve this phone number for accounting issues only. All right. Yeah, right. Mike C says I'm going to become a Kramer's mentor. All right,
Jim,
guys.
it's not too late to start over, Jim. You know, you're still young at heart. We can retrain you, Jim.
All right, everybody. Thank you for your kind comments. Thank you, Steve, for filling in for Scott, and Jamie. Thank you. You guys see us tomorrow. Come in tomorrow to our support session, 11 Eastern time.
Sounds good. Bye, Andy. Bye, everybody.
Bye-bye.